It's becoming a buyer's market for housing, but is that good? You've probably heard these terms before, but housing is generally either in a buyer's market, a seller's market, or a balanced one. Seller's market is when there's more buyers than sellers, giving sellers the power in negotiation. A buyer's market is the opposite. It's when there's more sellers than buyers. This gives buyers the negotiating power, but it also increases the risk of price declines. So that's why a buyer's market, whether it's good or bad, really depends on your perspective. If you're selling a home, flipping a house, or just concerned about your property values over the next couple of years, you probably don't love a buyer's market. But if you're a long-term investor or a homeowner, buyer's markets generally offer more opportunities. More deals on the market, you have better negotiating power, and there's probably less competition. Of course, you still need to buy smart and not buy a property that's going to see lower property values for years to come. But that's where that negotiating leverage comes in. In a buyer's market, generally, it's easier to buy below list price or buy below market value, which allows you to insulate yourself somewhat from the risks of potential price declines in the future. But buying in this type of market does come with risk, and it's not for everyone. What do you make of it? Is a buyer's market good or bad for investors? Let me know in the comments.